Hello everyone, welcome to this video. In this video, I am going to discuss on the concept of accounts and records, that is maintenance of accounts and records under GST, and also I am going to discuss on the audit under GST, as well as I am going to touch upon the topic of TDS as well as TCS under GST Act. Let us first start with maintenance of accounts and records under GST. In order to know the nature of documents or nature of records to be maintained under GST, you need to refer section 35 of CGST Act 2017. Section 35 of CGST Act provides provisions related to maintenance of accounts and records under GST, as well as you will have to read Rule 56 of CGST Rules 2017. So these are all the legal provisions relating to maintenance of accounts and records under GST. Let us first start with section 35. Under section 35, it provides that every registered person, any person who has registered under GST, has to maintain true and correct accounts of. It says that true and correct. It means that the accounts has to be very precise and it has to be proper and correct as well. So it has to, the legal wording says true and correct accounts of the following details. It says an illustrative list of details, as well as it has a residual clause which says that any other details or documents which will be prescribed. That is what the wordings of section 35 under CGST Act. What are all the data or the details has to be maintained? Any goods that are produced or manufactured by a registered person. If a taxpayer is a manufacturer, the details of goods that are manufactured during the tax period, the details regarding to that has to be maintained. Second one is any inward or outward supplies, details relating to inward supply as well as outward supply, that has to also be maintained. The third item is the value of inventory. It says that any time, at any time of the year or any time of the tax period, the value of the inventory has to be precisely maintained by the taxpayer. So that is the third aspect. The fourth aspect listed in the section is that the details of input tax credit availed and any output tax paid or payable during the tax period. That means that it says the details or the summary related to input tax as well as output tax of a taxpayer. That is what to be maintained. So as I told you, after this four items are mentioned, it also gives you a residual clause which says that any other documents that may be prescribed by the government, that also to be added to this illustrative list. So what is the document that is prescribed? Is there any document prescribed by government till date? Yes, there is a rule 56 you will have to refer for some additional documentations or additional details which a registered person is expected to maintain under the GST. So what are all those details? In order, in addition to the above details, it is going in detail. The rule gives you in detail what are all the documents to be maintained. The first nature of document is details relating to imports and exports. Whatever the imports or exports made by a taxpayer, the details related to that has to be maintained first. Second point is that any details of supplies on which tax is paid or payable under reverse charge mechanism basis. Any supply on which any supply on which tax is to be paid by the supplier under reverse charge, that is any inward supply, as well as any outward supply which the supplier has done, on which the tax has to be paid by the recipient. That means what? Supply on which tax is to be paid on RCM basis, reverse charge mechanism basis. So that is and any other relevant details or documents, whatever is prescribed under RCM mechanism, so that also to be maintained by the taxpayer. Then the third aspect is the details of any advances received as well as paid. So we all know that even on advance there is a GST liability. So advances received, details of advances received by the taxpayer as well as the details of advances paid. So both the details has to be separately maintained by the registered person. Then the next nature of document is any details of tax collected and paid along with register of invoice, credit notes, debit notes, etc. So whatever the taxes that has been collected by the supplier on their outward supply, and the related invoice, any credit notes or debit notes issued by the supplier, all those documents has to be precisely maintained by the registered person. The rule 56 further states that the names and addresses of the suppliers and customers, I am telling you that any names and addresses of the supplier has to be maintained, as well as names and addresses of the customer has to be maintained. Names and addresses of supplier with regards to inward supply, names and addresses of the customer with regards to outward supply, the details of that has to be properly maintained. Next one is complete address, the total complete address of the warehouse where the goods are stored, and the details of goods that are in transit. So all these documents has to be maintained. What are all those documents related to goods? Complete address of the warehouse where the goods are stored. That is one. Second thing is if the goods are in transit, both transit, and I'm meaning here both outward transit as well as inward transit. So both the transits, the details or documents relating to goods that are in transit, that also to be maintained. If any goods that are stored in any undeclared premises, for example, if there are any premises, all the premises under GST, wherever the taxpayer is conducting their business, all the premises relating to that has to be properly declared under GST. That is what the requirement of the law. The law requires that the taxpayer has to properly declare their place of business, how many ever place of business, including the warehouse, godown, whatever the place the taxpayer conducts their business, that has to be properly declared to the tax authorities. If there are any goods that are stored in any undeclared premises, in premises which are not declared by the taxpayer, tax shall be charged on those goods by the proper officer. If a proper officer finds out that some of the goods are stored in a premises which belongs to a taxpayer and the premises are not declared by the taxpayer, then immediately the proper officer will calculate tax on those goods and that will be levied on the taxpayer. Okay, so that is next part. Next part is any books to be kept in the principal place as well as every additional place of business as relevant to those places has to be maintained. For example, I can tell you the total documents or books of the enterprise has to be maintained in the principal place of business. In the principal place of business, all the books should be maintained. If at all, if not, in any additional place of business, you all know that there is a principal place of business which is the head office type of thing. So along with that, the taxpayer can also conduct business in some other premises which can be declared as additional place of business under GST. If whatever the documents or transactions done from that additional place of business, any documents or books relating to that has to be maintained in that additional place of business. Additionally, those documents can also be maintained in the principal place of business along with the transactions which you are doing from the principal place of business. Clear or not? To summarize, the documents has to be maintained can be maintained in both principal place of business as well as additional place of business, but it is mandatory that the documents relating to transactions done from additional place of business has to be maintained there. Clear or not? So the next point is entries that are if the books are maintained in a physical, and I just also wanted to add here that under GST Act, it is not mandate that the books has to be maintained only in the physical form. The books can also be maintained in an electronic form. GST Act allows a taxpayer to maintain his books of accounts in electronic form as well, like software or any data drive. So electronic format of books of maintenance of books of accounts is allowed under GST Act. If any books are maintained in electronic form, then any entries, the software or the electronic database should have a facility, or it should have a feature that any entries that are deleted or altered has to have that documentation as well, because in GST Act it does not freely allow any registered person to tamper the books of accounts. So in order to avoid the tampering the books of accounts, the GST law requires the taxpayer to maintain a software which has a facility to track the log of any deletion or alteration of the transaction done in the entries, or whatever the entries done in the books of accounts. Any deletion or alteration is done to that, the log of it or the track of it has to be provided by the software. If in the track of it, it is not, you cannot say that you are not at all allowed to do any deletion or alteration. If the deletion or alteration relates to any clerical mistake, if it relates to any clerical error, then those deletions or alterations are allowed under GST Act. But if it relates to any suppress of the transaction or evasion of any taxes, then those will be taken up by the officer, and the taxpayer will be penalized accordingly. That is the reason the Act requires that even if the books of accounts are maintained in electronic format, it should have the facility to track whatever the alterations made to the entries. So clear or not? Then it says that any quantitative details of the goods manufactured and services provided are also to be maintained separately. Quantitative details means whatever the goods that are manufactured or sold. So those details with respect to the quantity, so that has to be maintained. Okay, then there are some additional topics or concepts which we are going to discuss now. Is specific or certain types of books that are prescribed to be maintained by an agent. Agent is someone who works on behalf of some other person who is called as principal. If a person is working or transacting on behalf of another person, then the person who actually works is called as an agent. Then the person on behalf of whom the work is being done is called as a principal. So if there are certain books of accounts specifically prescribed for an agent, what are all those? One is that in the details of authorization received from each principal separately, because each principal authorized the agent to undertake certain transaction. For example, if a principal enters into a contract with a certain customer, then the supply related to that contract can be done through an agent. Then what happens? The principal will provide an authorization to the agent to supply on behalf of the principal. So the agent has to maintain the details of those authorizations received during the tax period with regard to each and every principal separately. If the agent works on behalf of more than one principal, then he has to maintain the authorization received from each principal separately. Then whatever the supplies that are received as well as provided on behalf of the principal, those details has to be maintained separately, principal wise as well as received as well as provide wise. I can tell you that inward or outward wise as well as principal wise. So everything has to be separately maintained. There should not be any collapse. The agent should not maintain any net of details. So he cannot net off inward supply as well as outward supply. Then also he should not club the transactions undertaken or the transactions done on behalf of more than one principal. recommended, as well as he should not net off inward as well as outward supplies. It has to be separately maintained. Okay, then what if the agent has to provide any periodical summary or periodical statement to the principal, then those periodical statements also to be maintained by each and every agent. The law does not give you any format relating to what is that statement to be submitted to the principal. The GST law does not give any format for that. But if at all there is an agreement between principal and agent for providing any periodical statement, if the agent has to provide periodical summary of whatever the transactions he has done on behalf of that principal, then those documents also to be maintained in the GST Act. So these are all the books or documents recommended or prescribed for an agent. Then what we are going to discuss now is books or documents that are prescribed for a works contractor. We all already know that who is called as works contractor. So these are all the documents or books that are prescribed for a person who is providing works contract service. The documents are the names and addresses of person to whom works contract are done. The details of a person to whom the works contract service is provided is nothing but the customer to whom the service of works contract is provided by the taxpayer. The second is the description and value and quantity, description as well as the quantity of the supplies that are utilized as well as received. See, for example, in order to provide the works contract service, the contractor has to purchase certain goods from some third party. Okay, if whatever the goods that are purchased as well as whatever the goods that are utilized in performance of the works contract, both has to be separately maintained. Then whatever the payments received, the details about the receipt of payment from the customer also to be maintained, and whatever the suppliers from whom the supplies are received. I told you that he has to maintain the names and addresses of the customer as well as he has to maintain the names and addresses of the supplier as well from whom the supplies are received. Why? Because he is answerable to the customer as well. If the customer asks the works contractor about from where the supplies are received, from where the goods are purchased, he is answerable to the customer. Similarly, GST Act also mandates the works contractor to maintain that as a separate documentation, maintain that details as a separate documentation as required by the rules. Okay, so what is now we are going to discuss? We are going to discuss rule number 57. Rule number 57 enables or empowers a taxpayer to maintain the books of accounts in electronic format. I told you that the taxpayer need not mandatorily maintain the physical books of accounts. Even if the books of accounts are maintained in electronic format, it satisfies the requirement of law that is provided in Rule 57. Rule 57 states that if the books of accounts are maintained in electronic format, then Rule 57 states that those electronic records are to be backed up. The backup of those data has to be taken properly and at periodical intervals. Okay, clearly it has to be taken, and it has to be preserved as well. Not only taking the backup, those backup has to be properly preserved as per the requirement of the law. In case of any destruction of records, for example, if the software collapses, if the software crashes or damages, then the backup taken should be in such a manner that it has to restore those documents within a reasonable point of time. The Act says that within a reasonable point of time, whatever the documents that are lost due to destruction of the software, it has to be restored within a reasonable point of time. In such a way, the backup of those documents has to be maintained. Okay, then also it says that if the proper officer demands for those documents, if the officer wants to verify the documents then the documents has to be submitted. It can be submitted in electronic format. It can be submitted in electronic format along with any physical copy if required. A summary of the data can be provided in the physical format, hard copy of that, as well as if the backup of software is submitted to the officer, then related passwords and how to the instructions relating to accessing the software, all those things has to be provided by the taxpayer to the officer in order to enable the officer to open and read the data inside the software. See, if the documents are maintained in electronic form, it could be encrypted, because different software, the usage of different software is different. It has a different methodology. You cannot expect the officer to know the methodology for each and every software. That is the reason whenever the taxpayer submits the document in electronic format, he has to provide along with the instruction about how to use that software. So clear or not? So this is what provided in Rule 50. Okay, now what we are going to discuss is notifications and circulars issued under this topic. In that, first we are going to discuss on notification number 28/2018. Notification number 28 was issued on 19th June 2018. The notification states that whatever the records or accounts that has to be maintained by a operator of godown or warehouse and transporters. If a person is an operator of godown, or if a person is an operator of if he is a transport operator, what are all the documents he has to maintain? The transporter registered in more than one state or union territory. If he is a person, or if he is a transporter and he has a registration in more than one state or union territory, then he can apply for a unique enrollment number, a separate number provided by the Act. It is called as enrollment number. He can apply for such enrollment number by filing a form called GST ENR 02. So by filing that form, he can apply for an enrollment number using any one of GSTN, because he will have multiple GSTNs because he is registered in more than one state. So using any one of the GSTN, he can apply for this enrollment number. After applying for that enrollment number, if he gets one of the enrollment number, then in all the future transactions, he will be quoting that enrollment number in place of GST. He will not quote GST in future, GST number in future, if he has obtained an enrollment number through this notification. That is what provided under notification number 28. Next we are going to discuss on circular number 61/35/2018. It was issued on 4th of September 2018. What does that circular says? It provides a clarification. It is a clarificatory circular. It clarifies on the e-way bill requirement in case of storing the goods in the godowns or warehouse of a transporter. If the goods are stored in the warehouse or godowns of a transporter, then what is the requirement clarification relating to e-way bill requirement as well as the documents, maintenance of documents as well. This clarification or this circular was mainly issued on the requirement of a textile sector, because under textile sector it is the general practice that the goods will be stored at the transporter's warehouse. The textile companies may not own a godown or a warehouse. Instead, they can use the facility of the warehouse facility provided by the transporter. Then the goods will be stored at the transporter's warehouse. If the goods are stored in such a manner, then all the documents or records relating to those storage has to be maintained by the textile person, as well as if the warehouse or the godown of the transporter has to be declared as an additional place of business in the registration of the textile person. This is provided in the context of textile industry, but it does not only related to textile industry, it can be used by any person who does business in this manner or in this agreement. Clear or not? Then if this is done, for example, if the godown of the transporter is declared as additional place of business of this person, then if the e-way bill requirement, if at all any goods are being transported from that warehouse to customer premises or from certain supplier to that warehouse, if the goods are going out from the warehouse or coming into the warehouse, then the e-way bill will be issued only to the place of that warehouse only. If the e-way bills are issued to that warehouse, it means that the e-way bill is complete. It is taken as the goods are reached to the customer's premises because it has been declared as an additional place of business by the registered person here. That is what clarified by way of circular number 61/35. Clear? So with this, next what we are going to discuss is, we are going to discuss section 36. Section 36 of CGST Act, a small section which says that what is the period of retention of books of accounts. What is the period the books of accounts has to be retained? In normal case, for example, in general, the books of accounts has to be maintained for a period of 72 months. For a period of 72 months from when, starting from the due date of filing of annual return of a particular financial year. From there, 72 months the books of accounts has to be properly maintained. Later that, if the books of accounts are not maintained, then the authorities cannot question, or the authorities cannot demand for the books of accounts relating to the transaction for which 72 months is over. Okay, what is the due date for annual return? We told you that generally the due date for annual return is 31st of December following the financial year. If the financial year gets over by 31st of March, then following that 31st of March, the 31st of December is the due date of filing annual return, which we have discussed already in our returns chapter. Okay, so 31st of December, from 31st of December, counting from that 31st of December, then from there 72 months the books of accounts has to be maintained. After the 72 months is over, then it means what, the authorities cannot demand those books of accounts. That is in normal cases. If in case of any appeal or revision or any application to any appellate authority, or in case of any inspection or in case of any investigation, if in these scenarios, then what happens, then the act particularly states that 1 year from the date of disposal of such appeal. For example, if I have applied for an appeal today, then if the appeal has been disposed after 3 months from the date of disposal of that appeal, what is called as disposal of appeal? It means that the appellate authority passes an order. Okay, from that date, next to 1 year, whatever the documents relating to the transactions under appeal as well as the documents relating to appeal, all these documents has to be maintained from 1 year from the date of date of appeal order. It can be appeal order or revisionary order or appellate authority order or any report from the inspection report or investigation report, whatever the scenario may be. From there, 1 year is what the books of accounts has to be maintained. But it does not stop with that. It says that in general case the books of accounts has to be maintained for 72 months, and in this case if the appeal is over, from there 1 year the books of accounts has to be maintained. The act says that whichever is later in these two scenarios, that is what the due date or period for maintenance of books of accounts. If 72 months falls after 1 year from the close of appeal, from the disposal of appeal, then you should refer only to that clause which is in the normal case. If the normal case of 72 months is over, but this 1 year from the date of disposal of appeal is not over, then you will have to refer to 1 year from the date of appeal. That clause has to be referred, then that clause has to be satisfied because it says whichever is later. There is one circular, there is also one circular issued under this category, which is circular number 47/21/2018. It was issued on 8th June 2018. The circular says that the records that are to be maintained by principal auctioneer in case of auction of tea, coffee, rubber, etc. Because generally tea, coffee or rubber are auctioned to certain suppliers, because there are so many persons who will be harvesting tea, and they will be growing tea and they will sell the tea to the market. There is a government body as well which regulates the auction of tea. So the tea and coffee are generally auctioned to the outside suppliers. So if whatever the documents or records that has to be maintained by the principal auctioneer who auctions the tea or coffee or rubber, etc., he is called as principal auctioneer. So these are all the documents the principal auctioneer has to maintain. What is that? Warehouse where the goods are stored to be declared as additional place of business. If the tea, coffee, rubber, etc. are stored in certain warehouse, then the principal auctioneer has to first declare that warehouse as his additional place of business. Second, both principal auctioneer as well as buyer, okay, has to who intends to purchase such goods, those details has to be maintained. What is the detail? So if a buyer who buys tea or coffee or rubber through auction, he also has to declare the warehouse where the goods are stored as additional place of business. Also the principal auctioneer also to declare that place as his additional place of business. If the tea is supplied through a private treaty, if a tea is supplied through a private treaty, then principal as well as auctioneer, because in that case principal will be a different person. Who is principal? Principal is the original supplier. Principal will be a separate person, as well as the auctioneer will be a separate person, because it is sold through a private treaty. Private person or an entity will be appointed to auction the tea, so the auctioneer will be a separate person. In this case, both the principal as well as the auctioneer has to comply with the provisions relating to the Act, maintenance of books of accounts, as well as the conditions laid down by this circular. All these things has to be satisfied by both principal as well as auctioneer. Okay, so with this, our discussion relating to maintenance of books of accounts as well as records under GST is over. Let us now discuss on audit requirement under GST. What is the audit provided, the provisions relating to audit under GST. First, let us understand the definition of audit. Section 2 clause 13 of CGST Act defines what is an audit. Under the definition, an audit means examination of records, returns or any other documents. It is an examination of records, returns or any other documents maintained or furnished by a registered person. Whatever the documents maintained or furnished by a registered person. We just now discussed what are all the documents to be maintained by a registered person. Audit is nothing but the documents maintained by a registered person, the examination of those documents. For what? To verify the correctness of the following items. Correctness of turnover declared, whatever the turnover declared by the registered person, so to verify those correctness. Second is the details of taxes paid, correctness of taxes paid, correctness of refund claimed, correctness of ITC availed, as well as to assess the correctness of compliance under the Act. Whatever any other compliance which the registered person has to do, whether the compliance has been done properly, that also has to be assessed by during this audit. That is what called as audit under GST Act. Let us now discuss what are all the types of audit under GST. Types of audit is, there are three types of audit under GST. One is audit done by a chartered accountant or a cost and management accountant. A regular GST audit. A GST audit can be done by whom? A GST audit can be done by a qualified chartered accountant as well as qualified cost accountant. Both CA as well as CMA is eligible to conduct GST audit. Eligible to conduct audit under GST. That is one type of audit. Second type of audit is any audit done by the local authorities. It means what? The tax authorities. if the tax authority audit that are done by a tax authority, that is the second type of audit. Third type of audit is called a special audit. We'll understand the requirements under CA audit done by CA or chartered accountant or cost accountant, that is provided under section 35 subsection 5 along read with rule 80 sub rule 3. So the provisions relating to that provides for the audit to be done by a CA or a CMA. Second one is section 65 of CGST Act, also section 20 clause 14 of IGST Act, as well as section 21 clause 15 of UTGST Act. So in all these provisions, the audit that can be done by the tax authorities directly. Tax authorities means GST authorities. If the GST authorities by themselves they are going to do some audit, those provisions are explained in this section. Next is special audit. Special audit is provided in section 66 of CGST Act, read with rule 102 of CGST rules. Let us now discuss in brief whatever the types of under each type of audit as well as the provisions relating to that. The first type of audit we are going to discuss now is an audit that can be done by a CA or a CMA. In this audit, it applies to whom? First of all, any registered person whose turnover during the financial year crosses a threshold limit. If it crosses a threshold limit, then he has to mandatorily get his books or accounts audited by a CA or CMA. That is what the requirement of the Act. Section 35 subsection 5 provides for this. What is the threshold limit? Threshold limit is provided in GST rules. Threshold limit is 2 crores. If the turnover of a registered person exceeds rupees 2 crores, then he has to get his books and books of accounts audited by a CA or CMA. There is one notification which is very recent notification number 16/2020 issued by Central Tax Authorities, issued on 23rd of March 2020. I can just tell you that it is the first day of lockdown, that is due to this corona issue or COVID-19 issue. There was a bigger lockdown. Even now there is a lockdown is going on. It is the first phase of lockdown. During that time there is a notification issued by the tax authorities. That notification states that it has just enhanced the turnover threshold limit for GST audit. For which year? Only for financial year 2018 and 2019. For financial year 2018 and 19, you should read as the threshold limit is not 2 crores, it is 5 crores only for that financial year. But in general, the threshold limit is 2 crores. If the turnover of the registered person exceeds 2 crores, then his books of accounts has to be audited by a CA or CMA. Then there was an amendment under CGST Act 2000 CGST Amendment Act 2018. It has inserted a proviso under section 35 subsection 5. The proviso says that the audit requirement does not apply to a central government, state government, local authority whose books of accounts is to be audited by a C&AG. If Comptroller and Auditor General of India, if the books of accounts of central government or state government department or any local authority, if it is to be audited by a C&AG, for those persons GST audit is not, it does not apply. So GST audit will not be applied for a central government department, state government department, local authorities. It is not all the CG, that is the department. It is only whose books of accounts are subject to audit by C&AG. For them only this provisions will not apply. Next, once this audit is over, for example, if a CA and CMA or CMA has conducted a GST audit, then they will have to submit a report. That report has to be submitted along with annual return. Okay, along with the annual return filed by the taxpayer, the auditor also has to submit his report through form GSTR 9C. That is a statement under GSTR 9C. In that he has to provide his report as well after conducting the GST audit. Okay, this is the requirement of section 35 subsection 5, which is one type of audit done by a CA or CMA. Second type of audit is audit done by a tax authorities. Okay, I told you whatever the section related to that. Now we are going to discuss the procedure the tax authorities to follow for them to do the audit of a books of accounts. The tax authorities can select any taxpayer whose books of accounts needs to be audited by the tax authority. See, generally the first level of audit is done by a CA or CMA. After that, if a tax authority suspects that the audit is not proper, or if they wants to conduct their own audit, then they can call for the books of accounts of the taxpayer, or they can even visit the premises of the taxpayer and they can conduct audit themselves. That is the type 2 of audit, which is called as audit by tax authorities. For this, they will have to follow the following procedures. On commencing the audit, if the tax authorities are commencing the audit, they will have to first intimate the taxpayer by issue of a notice in GST ADT 01. That is the notice they are prescribed by the law. Through issue of that form notice to the tax authorities, they will have to intimate the taxpayer relating to the audit they are proposing to do. When it has to be issued, it has to be issued 15 days prior to the commencement of audit. So if they want to commence the audit on some day, at least 15 days before to that, they will have to intimate to the taxpayer. Second, once they commence the audit, the duration of audit can be 3 months. They have to complete their audit within 3 months. It can be further expanded up to 6 months. Okay, it means what, totally 3 months plus 6 months, which can be 9 months. That is what the maximum time the tax authorities can take for completing the audit by them. It has to be taken from the date of commencement. The 3 months or 6 months has to be calculated starting from the date of commencement. Now let us understand what is the date of commencement. Date of commencement is nothing but later of these two. Later of what? One is submission of records called for by the authorities. If the authorities has issued a notice asking for submitting certain documents or records, and you are submitting the documents of records, the date of submission of those documents or records, that is one date. Second is if the tax authorities visits the premises of the taxpayer. If the tax authorities visits the premises of the taxpayer for the purpose of conducting the audit, then that date of that visit, these two, whichever is later, that has to be taken as the date of commencement of audit. I will give you an example. If the tax authorities has issued a notice to the taxpayer on 1st of May 2020, on 1st of May, the tax authorities has issued a notice regarding asking for submission of certain records or books of accounts. In response to the notice, the taxpayer has submitted the records on 20th of May. On 20th of May, the taxpayer has submitted the records. The tax authorities has visited the premises of the taxpayer on 25th of May. For the purpose of conducting the audit, they have visited the premises of the taxpayer on 25th of May. Here 20th of May, the taxpayer has submitted the records. The tax authorities has visited the premises of the taxpayer on 25th of May. Later of these two is 25th of May. From there, the duration of the audit has to be calculated. It can be 2 3 months, expandable up to 6 months more. Then after conducting the audit, after the completion of the audit, the findings, if there are any findings during the audit, that has to be communicated to the taxpayer. Okay, before they proceed to issue an order, the findings of the audit has to be first communicated to the taxpayer by issue of form GST ADT 02. There is a form prescribed for that. That form has to be issued to the taxpayer within 30 days from the date of concluding the audit. If the audit is concluded on one day, within 30 days from that date, the department has to communicate the findings of the audit through issue of GST ADT 02. Okay, and if they come across during the audit, if they come across that there are certain non-payment, or if there is certain short payment of tax, if they have detected that there is a non-payment or short payment of tax during the audit, then they can take a penal action under section 73 or 74 can be initiated by the tax authorities. Next, what we are going to, this is the second type of audit is over. Now we are going to discuss third type of audit. Third type of audit is special audit. Special audit is the direction of the audit is issued by a assistant commissioner, okay, with the prior approval of commissioner. The assistant commissioner, not be any officer who is not below the rank of assistant commissioner. Above the rank of assistant commissioner can issue a direction. What is that? If he is an assistant commissioner, then he has to take a prior approval from the commissioner before issuing a direction to conduct a special audit. To whom the direction will be issued? The direction will be issued to the taxpayer. The direction will be issued to a taxpayer by way of issuing a form called form GST ADT 03. Through that form, they will issue the direction to get his account audited by a chartered accountant or a cost and management accountant. The type 1 audit is, if the turnover threshold limit is crossed, then they will have to mandatorily get his books of accounts audited. That is mandate. Here it is not automated. If the officer issues a direction, then based on that direction, the taxpayer has to get the books of accounts audited by a CA or CMA. When the officer can issue a direction, the officer can issue a direction irrespective of the books of accounts are already audited under any other act or law, in the which is in force for the time being. For example, if a person's books of accounts is already subject to audit under income tax law, even in that case, the officer can issue a direction to the taxpayer to get their accounts, to get their books audited under GST Act as well. Okay, through that direction, what happens? The the taxpayer has to engage the CA or CMA to get his accounts audited. Generally, the CA or CMA will be recommended by the tax authorities itself. Whoever issues the direction, they will also recommend a CA or CMA who will be conducting the special audit for the taxpayer. Once the special audit is over, there is a time limit for conducting this audit, which is 90 days from the date of issue of direction. Okay, within 90 days, the CA or CMA has to complete the audit. If he is not able to complete the audit, then it can be extended for a further period of 90 days. With the approval of the commissioner, the duration can be extended for a further period of 90 days. 90 plus 90, the total period available for the CA or CMA to complete the audit is 180 days. That is the maximum time allowed. Within that, they have to complete the audit, and the report of the audit has to be submitted to the officer. Once that report is submitted, then if there are any findings during the audit, that findings has to be communicated by the officer to the taxpayer by issue of a form called form GST ADT 04. Through that issue of that form, any findings during this special audit will be communicated by the taxpayer by the tax authorities to the taxpayer. Okay, whatever the expenses to be incurred, whatever the expenses incurred for conducting this special audit, as well as the remuneration of the professional, that will be paid by the commissioner. It will be paid by the income tax, it will be paid by the GST authorities only. That is the third type of audit, which is special audit. Now let us discuss about the distinction between section 65 and section 66. Section 65 states the audit done by the tax authority. Section 66 states about the special audit. We are now going to discuss on the distinction between these two sections. First type of distinction is nature of audit. Okay, under section 65 there is it is called as a departmental audit. It means what the tax authorities themselves will conduct the audit, that is departmental audit. Under section 66 it is called as a special audit. In the special audit it can be generally conducted by a CA or CMA, then the report will be submitted to the tax authorities. Okay, the second one is conducted by the departmental officer themselves. In the case of special audit, it can be done by a CA or a CMA, which will generally be nominated by the commissioner. Third one is prior notice. Prior notice of 15 days is required. Here there is no requirement of prior notice, but there is an intimation to be required. It does not have any date and all, but generally an intimation has to be provided by the tax authorities for conducting the special audit. Time for conclusion of the audit, it is 3 months. Further extension of 6 months is allowed. Totally 9 months is the total time period along with extension. In the case of special audit, it is only 90 days, which can be further extended up to further period of 90 days. Totally 180 days is allowed. Audit findings, if the audit findings should be intimated soon upon completion of the audit. We just understood that it has to be intimated to the taxpayer within 30 days from the date of conclusion of the audit. Here the audit reports, if there are any findings, that will be communicated through issue of a separate form to the taxpayer. Is there any opportunity of being heard, which is principles of natural justice? Is there any requirement under section 65? No, there is no requirement under 65 regarding principle of natural justice. But in the case of section 66, which is special audit, here where material gathered during the audit is to be used in any proceedings against the auditee. It means what? If there is any if the material gathered during the audit is to be used as an evidence against the taxpayer, then an opportunity of being heard has to be provided to the taxpayer first. Next one is if the penal action is the same for both an audit under section 65 as well as audit under section 66. For both the penal action provisions are same. Okay, so with this the concept of audit under GST is over. We have just completed the concept of audit under GST. Okay, next provisions we are now going to discuss is provisions relating to TDS as well as TCS under GST Act. First let us discuss on provisions relating to TDS, tax deducted at source. See, TDS or TCS are nothing but it has been taken up from the provisions of Income Tax Act. Under Income Tax Act there is already the concept of TDS and TCS are available under Income Tax Act. GST Act has just taken up the concept from the income tax law only. So the TDS is under GST is not applicable for every person. There are certain persons to whom this provisions of TDS is applicable. To whom this provisions of TDS is applicable is, it is applicable to any department or an establishment of a central government or state government. Any department or establishment of a central government or state government, it is by default it is applicable with certain exceptions. There are certain exceptions provided by way of notification. Okay, you can refer to the notification, 1 or 2 exceptions are provided, but otherwise for all the department or establishment of a central government or a state government, this TDS provisions is applicable. Second one is any local authority. Third one is any government agencies. Not only for the government department as well as government agencies, this TDS provisions are applicable. Then fourth category is any other person or category of persons as notified by the government. Okay, that is the fourth category. These 4 categories are already provided in the Act itself. Section number 51 of CGST Act provides provisions relating to TDS under GST. Under that section 51, these are all the 4 types of persons listed in section 51 itself. Okay, In this, that residual clause says that any other persons who can be notified. Okay, as of now there are the following persons are already notified or specified by the government. What all those persons? An authority or board or any other body with 51% or more participation by way of equity or control set up by an act of parliament or legislature or established by any government. If any entity which is a government company, for example, it says that 51% of more of participation by way of equity or control. It means that if the shareholding with voting power of more than 51% is held by any government, it means it is called as a government company. One is government company. Second one is if the entity is established by an act of a parliament or a state legislature. I can just tell you that CMA Act is established by an act of parliament. A CMA entity is established by an act of parliament. So all these things are covered under TDS provisions. Next one is any society established by the central government or state government or a local authority under the Society Regulation Act. See, we just now discussed that it is applicable for a department of central government, department of state government, as well as a local authority, as well as government agencies, as well as any societies that are established by these governments or local authorities under Society Regulation Act. For them also TDS provisions applicable. Next one is public sector undertakings. Any public sector undertakings, these provisions are applicable. We have just now discussed about the to whom this TDS provision shall apply. That is what we have discussed now. Next we are going to discuss on certain the various provisions relating to TDS. First one is what is the effective date from this when these provisions are notified. The effective date of applicability of TDS is 1st of October 2018. From 1st of October 2018 only the provisions are made applicable. The TDS provisions are applicable by issue of a notification number 50/2018. It was issued on 13th of September 2018. On that day, through issue of this notification, they have applied the provisions relating to TDS from 1st of October 2018. What is the rate of TDS? Rate of TDS is 2% on the value of payment made or credited. Whatever the payment made or credited to the supplier, on that 2% has to be deducted as TDS. When it is applicable, we just now discussed on the person to whom it is applicable. Now we are going to discuss when the TDS provisions will become applicable to those persons. TDS will be deducted on payment made or credited to the supplier of taxable goods or services only. See, the TDS provision shall apply only to supply of taxable goods or services. It will not apply for all the types of supplies, only on taxable supplies. If the total value of supply under a single contract exceeds rupees 2,50,000, it means for one single contract is entered, the value of that contract is more than 2,50,000, then TDS provisions will apply. It is not relevant with what is the value of the bill. For example, the contract value is 3 lakhs and the entire 3 lakhs is towards provision of taxable supplies. That also is very important. If the 3 lakhs includes any exempt supply, which is for example to the value of 1 lakh and taxable supply value is 2 lakhs, then this TDS provisions will not apply. It says that the contract has to be for provision of taxable supply. Second condition is the contract value should be more than 2,50,000. If the contract value is equal to 2,50,000, then also this TDS provisions will not apply. It should be more than 2,50,000. That is second condition. Third condition is it should be a single contract. If there are multiple contracts entered with a single supplier, which is less, each and every contract is less than 2,50,000, then also TDS provisions will not apply. Single contract which should be more than 2,50,000. These three conditions are very much important for application of this TDS provisions. Okay, then it says that the value of supplies, which we said that the taxable value of supplies, it should exclude the value of any GST component. For example, the total value of contract is 2,60,000, including 18% of GST. It means what? After excluding GST, it will be less than 2,50,000. In that case, TDS provisions will not apply. You will have to see the threshold limit of 2,50,000 excluding the supply value of excluding the GST component on the supply value. Clear? So that is what we will have to refer here. Okay, once all these provisions are applied, what you have to do, whenever you are making any payment or whenever you are crediting the supplier in your books for the payment, you will have to deduct TDS. After deducting the TDS, it has to be paid to the government. It has to be paid to the government within 10 days from the end of the month. Within end of the month, within 10 days, it means what? 10th of the following month, it has to be paid to the government by debiting the cash ledger. It means what? It cannot be paid by utilizing credit ledger. ITC cannot be utilized for payment of TDS. It has to be paid only through cash. And crediting liability ledger. Crediting liability ledger means what? You will credit the liability of TDS. When the TDS liability will be adjusted, there is a return requirement. Filing of return has to be made. For TDS returns has to be filed. After you file the TDS returns, the liability ledger will be adjusted. So, but the payment has to be made every month within 10th of the following month. Next one is, once you make all this payment, then from the date of payment within 5 days, a TDS certificate has to be provided to the supplier. TDS certificate states what? This is the amount of TDS that is deducted from the value of supply. So with stating that there should be a certificate to be provided. If the TDS certificate is not provided within 5 days from the date of remittance, for example, if I remit the TDS relating to this month in the following month of 10th of the following month, from there I have to issue the certificate within 5 days. Within 15th of month I have to issue the certificate. If I have not issued the certificate within 15th of the month, then starting from 16th, a late fee is payable. Late fee at the rate of ₹100 per day. ₹100 per day late fee is payable, and the maximum late fee will be paid as 5,000. 100 and 5,000 is under single act. For example, if the TDS is relating to CGST Act as well as SGST Act, then 100 under CGST Act, 100 under SGST Act, 5,000 under CGST Act, 5,000 under SGST Act. That is what you can say that if the delay is more than, for example, if the delay is more than 50 days, it means what? Per day, if it is 100 rupees, then more than 50 days will give you 5,000 rupees, more than 5,000 rupees, but the maximum penalty or the late fee is restricted to 5,000 rupees only under single act. Next one is, if the TDS is not deducted, or if the TDS deducted and not remitted to the government on due date, then there is an interest liability. Interest liability under section 50, which is 18% per annum. Interest at the rate of 18% per annum under section 50 has to be paid if the TDS is not deducted, or if the TDS is deducted and not paid to the government. If there is any TDS paid in excess, if the TDS is deducted and paid in excess, then the excess amount can be claimed as a refund. The provisions relating to refund, which will be discussing in the refund chapter. Okay, so that provisions relating to refund will apply for this obtaining refund under TDS also. And the refund can be applied by both deductor as well as deductee. If the TDS is paid and if it is credited to the deductee's ledger, then deductor cannot claim for refund, only deductee can claim refund. But if the TDS is paid but the certificate is not issued, or if the return is not filed for that, then what happens? The deductor can claim the refund of the TDS. Clear or not? Next, what we are now going to see is supply. What is the supply? Here, supply means both taxable supply as well as exempt supply. Supply involves both taxable supply as well as exempt supply. It is not saying that the contract should have only taxable supply. If the contract has exempt supply also, the TDS provisions can apply, provided the value of taxable supply is more than 2,50,000. Clear or not? So supply involves both taxable as well as exempt, but the threshold limit of 2,50,000 will apply only on taxable supplies. Clear or not? The value for threshold shall be computed only from the amount of taxable value of supply only. advance paid, if there is any advance paid, then TDS shall be applicable on the payment of advance as well, if the above conditions are satisfied. Once the TDS is applicable, then even if the advance is paid, on that also TDS has to be deducted. Why? Because tax has to be paid on advance as well as, right? So TDS also has to be deducted on the advance payment. Okay, there is a certain scenarios or situations where this TDS provisions will not apply, which we had already discussed. Now I am going to just summarize it. Supply of exempted goods or services. For example, I have entered into a contract which involves only supply of exempted goods or exempted services, exempted supply. In that case, TDS provisions will not apply. If it does not involve any taxable supply, then TDS provisions will not applicable at all. Second one is, if this contract involves both taxable supply as well as exempted supply, then value of taxable supply should be more than 2,50,000. It is not equal to and more. It means it is more than only. It should be minimum of 2,50,001. Then only this TDS provisions will apply. Goods on which TDS is not applicable, then also TDS will not be applicable. If GST itself is not applicable on the goods, TDS provisions also will not apply on those supply. Okay, so next one is, if tax invoice issued prior to 1st October 2018. The contract is there, okay, contract is more than 2,50,000 and it is the taxable supply, but the invoice issued before 1st of October 2018. What is 1st of October 2018? That is the effective date of application of TDS provisions. Before 1st of October 2018, if the invoice is issued, then TDS provisions will not apply to those invoices. You need not deduct TDS on those invoices. Yeah. Apart from that, there is one certain scenarios for which TDS will not apply. Let us discuss 4 types of scenarios and the TDS applicability on those scenarios. First scenario is, the supplier is in state A. Supplier is in one state, recipient is in same state, and the place of supply is also in the same state. All the 3 items are in same state. In that case, it is called as what? It is called as intra-state supply. Within the state supply, then what will happen? If it is an intra-state supply, you will apply CGST and SGST for that. CGST and SGST, if in that case TDS has to be deducted at the rate of 2%, I told you 2% will be divided as 1% under CGST Act and 1% under SGST Act. That is how the TDS has to be deducted. Okay, scenario number 2. In scenario number 2, supplier is in state A as well as the recipient is also in the same state. However, the place of supply is in a different state. Place of supply is provided in other state. In those cases, it is called as interstate supply. We have already discussed about place of supply provisions, which is called as intrastate, interstate already. So if the supplier is in a different state and the place of supply is in a different state, it is called as interstate supply. In this case, what is the applicable taxes we will apply is IGST. If you are applying IGST, then the TDS has to be deducted at a single rate of 2%. This is scenario number 2. In scenario number 3, supplier is in one state, recipient of supply is in a different state, and the place of supply is in a state where the recipient of supply is located. In that case, supplier and recipient is in a different state, but the recipient and place of supply is in the same state. Here, this is also a case of interstate supply, and 2% of TDS has to be deducted on the IGST. Then the final scenario. In this scenario, clearly understand, forget about the place of supplier, where the place supplier is located, you forget about that. The place of supply is in one state and the recipient of supply is in a different state. In that cases, irrespective of where the place of supply is in one state and recipient of supply is in a different state, and the supplier is also in the same state where the place of supply is there. Okay, so in this scenario, there is no TDS applicable. TDS is not at all applicable in this scenario. Clear or not? So you should understand these 4 scenarios. In these 4 scenarios, in one scenario, TDS will not be applied. Okay, so this is what the provision applicability of this TDS. Now we are going to discuss on the small guidelines relating to deductions and deposits by DDO. What are all the guidelines provided by the Act, and there is some options provided for the DDO regarding deduction of TDS as well as deposit of TDS. DDO is, the full form of DDO is Drawing and Disbursement Officers. Any person who is registered under TDS as a TDS deductor, and the person who is responsible to deduct TDS is called as DDO under this Act. This Drawing and Disbursement Officers. For deduction and deposit of TDS, there are two options provided by the GST rules. Option number 1 is the TDS can be deducted and deposited bill wise. Second one is bunching of TDS. It means what? You can accumulate the TDS of several bills and you can deposit the TDS at a stated periodic intervals. See, option number 1 is for every bill sanction, for the payment made on every bill, for each and every bill, TDS will be deducted for each and every bill, and the deducted TDS will be immediately deposited with reference to that single bill, which is bill wise the TDS will be deposited. This is first option. In second option, option number 2, TDS can be accumulated for various bills. This option can be applied or adopted by a DDO who is passing or sanctioning many number of bills in a given tax period. If in a month there are so many bills are being passed, so TDS will be deducted on each and every bill, but the deposit of TDS will be accumulated and can be deposited at a stated period of periodic intervals. It can be either weekly, or it can be fortnightly, or it can be monthly. Okay, so in these three scenarios the TDS can be deposited, but it cannot be more than month, it cannot be bi-monthly, or it cannot be yearly and all, because for every month TDS has to be deposited. Either it has to be deposited bill wise, or it can be deposited for various bills together at a stated periodic intervals. That is what the options provided by the Act for the DDO. Clear? So with this, provisions relating to TDS is over. Let us now enter into provisions relating to TCS. This is a small provision which is called as tax collected at source. Tax deducted at source is nothing but the TDS is a separate deduction which the payer will be deducting. Tax collected at source is nothing but, apart from collecting the single tax, there is some additional tax will be collected by the payer here. That is what called as tax collected at source. It is the TCS provision shall be applicable in a single type of transactions as on date. We are now going to discuss provisions relating to TCS under GST. Under GST, okay, so for to whom this TCS provisions is applicable? This TCS provisions is applicable for person who does transaction through an e-commerce operator. We already discussed about what is e-commerce, who is e-commerce operator, electronic commerce operator. If a supplier supplies goods or services through an electronic commerce operator, then the provisions relating to TCS shall be applicable. Let us now first understand or discuss about the transactions done through e-commerce operator. We will first understand the transactions through e-commerce operator. There is an e-commerce operator. What happened? First, there is a recipient of supply who is a customer. Customer places an order to an e-commerce operator. Okay, customer places an order to e-commerce operator. After receiving the order from the customer, e-commerce operator places that order to a supplier, to an appropriate supplier. That order will be placed by the e-commerce operator. After receiving the order by the supplier to the e-commerce, from the e-commerce operator, the supplier will supply the goods to e-commerce operator, that is through by the channel of e-commerce operator. The supply will be done to the recipient. It is nothing but the e-commerce operator will receive the supply and it will be forwarding that supply to the recipient. It acts like a channel, through that the supply is made. Here we should understand the supply which will be provided by the supplier should not be falling in the nature of supply on which RCM is applicable. RCM under section 9 subsection 5, which we have already discussed, this supply should be other than those supply. Okay, So that supply will be received by the e-commerce operator and it will be supplied in turn to the customer. After the supply is made, the recipient of supply or the customer will make the payment. Consideration will be paid to e-commerce operator. The e-commerce operator will collect the consideration from the recipient of supply and he will forward that consideration to the supplier. What consideration he will follow? He will forward the consideration after deducting the commission or the amount which is pertaining to the e-commerce operator for the services provided by e-commerce operator. He will deduct that amount. Along with that, he will also collect TCS. TCS also will be deducted from the consideration. That consideration will be paid to the supplier. Clear on that? Is what the transaction all about under TCS provisions under e-commerce operator. Let us now discuss on the provisions of TCS. Similar to TDS, TCS provisions is also applied through the same notification with effect from the same date. Effective date is 1st of October 2018. The notification is the same notification which we discussed for TDS provisions. The rate of TCS is 1%. 1% as similar to TDS. TDS is 2%. TCS is 1%. Similar to TDS, TCS also, in case if the act involves, the tax act involves is 2 acts, for example CGST and SGST, then TCS will be collected at 0.5% from CGST, 0.5% from SGST. If the respective or the applicable act is IGST act, then the TCS rate is 1% together. Clear or no? 1% on the net value of taxable supplies. On the net value of taxable supplies, the TCS will be calculated. Let us now understand what is net value of taxable supplies. Net value of taxable supplies is nothing but aggregate value of total taxable supplies. Total supplies made by the supplier through the e-commerce operator to the recipient. So that total aggregate value, in that less supply on which RCM is applicable. RCM under section 9 subsection 5, not RCM under section 9 subsection 4. 9 subsection 4 is supply based RCM. This is recipient based RCM or the nature of supply based RCM, which is 9 subsection 5. So supplies under 9 subsection 5, that will be reduced from the aggregate total value of supply done through e-commerce operator. Third one is on that aggregate value of supply which is returned to the supplier itself. For example, if the supply is made by the supplier through e-commerce operator and certain supplies are returned back to the supplier, that will be reduced, which is nothing but similar to sales return. Clear or not? So the net of it on that 1% TCS will be calculated. If the net is a negative amount, then the TCS will be ignored. There will not be any negative TDS, so the TCS amount provisions will be ignored. But if the net is a positive, then TCS on that net amount will be calculated at the rate of 1%. And the TCS provisions is applicable for supplies made by e-commerce operator other than an agent, made by e-commerce operator other than an agent on behalf of some other supplier. E-commerce operator supplies on behalf of some other supplier. Here you should understand, if e-commerce operator supplies on his own behalf, then TCS provisions will not apply. If e-commerce operator supplies on behalf of some other suppliers and he is not also acting as an agent, and e-commerce operator collects the consideration and remits the consideration to the supplier, if all these scenarios are possible, then in that scenario only the TCS provisions will be applicable. Next one is payment of TCS. After the TCS is collected or the TCS are collected, it has to be paid within 10 days from the end of the month. As similar to TDS, it has to be paid within 10 days from the end of the month, and it can be paid only through electronic cash ledger. You cannot utilize ITC for payment of TCS. Unlike TDS, there is no threshold limit for application of TCS. In TDS, we have seen a threshold limit of 2,50,000 of a single contract value, but under TCS there is no threshold limit. Once the transaction is done, you have to apply TCS provisions. Then TCS provisions shall not apply on exempt supplies. As similar to TDS, TCS also will not apply on exempt supplies. Only on taxable supplies TCS will be applicable. And supplies on which recipient shall pay tax under RCM. Here it says, if the supplies are liable to RCM under section 9 subsection 4, on that also TCS provisions will not be applicable. Clear or not? So there we saw 9 subsection 5 for calculating the net value of taxable supplies. Here TCS provisions itself will not apply if the RCM provisions relating to section 9 subsection 4 is applicable. If the TCS provisions are not complied with, there is a penalty clause. Penalty of 10,000 or the amount of TCS involved, whichever is higher, that will be levied under section 122 subsection 1. If TCS is not collected, or if the TCS is short collected, or if the TCS collected but not paid. Plus, it does not stop with that, plus a general penalty of up to 25,000 under section 125 will be applied. There are 2 penalties. Next is, separate registration has to be obtained for TCS by operator in each state where the existence of operator. Wherever the operator, e-commerce operator does his business, in each state he has to apply a separate registration for TCS purpose. Whether or not he has registered himself under GST, he has to separately get registered under TCS. Next one is indication. Unlike TDS, in TDS, that on the invoice itself, that 2% deduction of TDS has to be mentioned. But in TCS scenario, the indication in the invoice is not required. You need not mention the TCS amount on the invoice itself. Next one is, there is a requirement of filing of annual statement. Any person to whom TCS is applicable, the e-commerce operator, the e-commerce operator has to file an annual statement on or before 31st December of the following year, which is similar to annual return. So 31st of December, he has to file an annual statement, which is separately from the annual return. Next one is, whatever the TCS collected and deposited, it is available as a credit to the supplier. The supplier can view the TCS amount in his electronic cash ledger. Okay, in that the credit is available to the supplier. Any TCS by T Board of India, TCS provision shall apply to T Board of India also from sellers and auctioneers. It means that if the T Board of India is maintaining some online platform or electronic platform for doing this auctions of tea, then this TCS provision shall apply to that T Board of India also. This is what the provisions relating to TCS. Okay, so with this, our today's video is over on the topic related to accounts and maintenance of accounts and records under GST, audit provisions relating to GST, and the provisions relating to TDS and TCS. Okay, let us meet in another video under GST law. Okay, so thank you.